I find that the harder I work, the more luck I seem to have. Thomas Jefferson, our second president. Great quote. I love quotes from the past, quotes from brave and knowledgeable and wise men and women, and all they have to pass down to us from their experience. That's why I always start every show with a good quote from the past. Now, let's jump into these charts. Everything up for the day, and I've got a special treat for you. At the end of the show today, I'm going to show you what our results have been using our method of dropping in these handy little prediction and measurement tools that we have over here. From the beginning of the year, how did we do on the S&P 500, writing it up and down? Well, of course, this latest up has been the greatest up. I believe we had a 12.63% rise from the worst getting in point in the first week to the worst point of this week. We nonetheless had not quite a 13% return. And of course, on these returns, I'll tell you how those came out. Well, you can see the little numbers there. 2.88 on one, 2.63 on another. But I'm going to tell you about the little trick that we add into this, which helps maximize your returns by limiting your losses. I'm going to explain that to you. So if you care about how to really employ our always winning method, stay tuned. After I get through today's show, I'm going to give that out to everybody. So let's jump in the chart, just see where we were. Up for the day, look at this week, turning around nicely, booming up. We can see, again, up in the morning, a little further up in the afternoon, nice big candle still going up. So we're going to go ahead and move on up to the next one, the next rung in the ladder. We see that we've reached a higher high this week. We've continued to go. The market just ain't dying yet, my friends. We look at where the weekly trend line is on the 2-day and the half-day. Now, again, you can see some sideways sliding, but it just keeps bumping up. It just keeps on a-going. And you gained another percent today. Just beautiful. What about the Qs? Struggling not as much as the S&P. Didn't hit a higher high this week. Up for the day, though, almost 2%, 1.82%. We can see where it's come off. The first day of this latest 2-day candle, it's moved away from, gone from red to green, moved away from the weekly trend line on the 2-day chart. And of course, we can see up in the morning, not quite as high in the afternoon, it does not look, but again, moving up nicely. So as we end the week on our stocks, we see them continuing to move up. What about 20-year bonds? Up for the day, 0.50%. See where things bounded down in the morning, recovered some in the afternoon. We're still below the trend line on both the 2-day and the half-day. That is the weekly trend line. We got a red spinning top here. You know, we had this fake out week here and then things rolled back over. We didn't jump on it just because everything was so weak. We wanted some more confirmation after all this sloppiness here. When you have clean charts like the S&P 500, you can look to jump into spinning tops and all. But when you have junky charts like 20-year bonds have become as of late, we can look back in the past and see nice charts. But then they slowly started devolving. So again, we start just trusting charts when they start giving us more accurate views. And you might say, what's an accurate view? That is where you might start with a spinning top, but then you go to nice, good, solid candles that move up. Again, those are what we like to see. Otherwise, it gets real iffy. And again, we don't mind taking losses as long as we cut them in charts that we are able to trust. So again, not trustworthy, hanging back from that right now. Let's look at, at gold. Gold up for the day, 0.80%. Do look at this because it is important. Let's zoom in a little bit. See, this week we've got a tail on the bottom. And again, I'm always careful to move this dashed line away because you can see how it can make candles look longer, wicks on candles look longer or existing when they don't, like it looks like there's one here on this chart. There's not, it's just the dash. So as we look at this week, what do we see? Well, we see a wick on the bottom. Don't like seeing that wick on the bottom. Don't like wicks on the bottom of a green candle. So again, gives us just a little bit of trepidation. You also see we don't have any super high volume spiking up here, but we do see gold just slowly but surely trying to continue to move up. We look at the 2-day chart. It's been devolving, sitting right there. First day of this latest 2-day candle sitting right there on the weekly trend line. We do see, because of the up movement on Friday in the morning and afternoon, pairing off a little bit of that up move in the afternoon in gold. A little bit higher volume in the morning, lower in the afternoon, things slowing down. But we do see things moving still in the right direction, third week after gold bottomed. So we will keep an eye on things. Nothing about volumes exciting us. When we see volume spike, those things can excite us and make us wonder about what's actually going on, but no confirmation there. Lastly, we will go to Bitcoin. Bitcoin up for the day 0.63%. Now, we see where, Bitcoin moved up and then has been sliding over, again, just sort of down at the bottom on that half-day chart, below the weekly trend line on this weekly trend line, but it is below it on the 2-day chart, and not much to show there for the candle that's trying to draw. Looks like it's almost a line with a little bitty wick on the bottom. So we'll continue to watch and see where Bitcoin's going. If it's going to pull back, I want it to pull back nice and strong and then reset, hopefully, to be able to give us some clear movement. As soon as I finish this program, I will be releasing to everybody our charting cryptos, commodities, and currencies. Okay, that is the big 5 that we do for you every day. Now, here is what I was going to share with you about what we have seen, and I have some numbers for you. And I explain this in the always winning method, and I've actually modified it some. What we've done here on the way that we do our 3-wave trading, and that is these 3 waves, the half-day, 2-day, and the weekly. We set this up in a certain way. When we see charts that we can count on go from red to green or green to red, we look to jump into a trade that week. Now, I just set a rule for this year on how I'm going to measure the charts for you. And what I did, just so you know, is when we have a week where the candles change, like the first week of the year, first full week of the year, what did we do? Well, we saw things go from red to green, did we not? Yes, we did. So we said, okay, we're going to jump in to an up move on the S&P 500 this week. So I picked Friday. We talk about letting the week set up for you. And I just said, okay, I'm going to do this in all of the trades for this year. We're going to get in on a Friday in the afternoon at the worst point. So I got in at $399.10 on Friday of this week starting the 9th of January. We jumped in at the worst point. That was the high in the afternoon. $399.10 was our jumping in point. I used our predictor tool here, and I used the ATR, average true range, on the 2-day chart during this time period there on Friday. It was $11.49. Average true range, you can see right here, you see that 14? That means 14 periods. If it's a 2-day chart, 14 periods is 28 days. It's the average movement of the stock or ETF during those 14 days. For the S&P 500, an ETF, this is the SPY ETF, it was $11.49. That is where that figure after target comes from. See, they're in the green bar and in the red bar below, $11.49. It was 2.88%. So the way I did this, my X trade for my practice trades in these is $100,000. So I put $100,000 in my practice trade into the market. at $399.10. I set my loss limit at 2.88%. You can see the stop down here. I set my target at 2.88% up, which again would go up to the amount that would give me that. If I do this here and jump into my settings, you can see entry point 399.10, exit point 410.59. Now if you look, what happened was this move actually went along and knocked us out here at, in other words, half of our position, because our rule is to set up with a $100,000 trade, or whatever your X trade is. X is what your typical trade is. So in our practice trade, it was $100,000. We sold half our position. When we hit it, that we would have hit it during the week of what? During the week of January 30th. We put in a good till canceled sell order the minute that we buy our $100,000 worth of SPY. We put in a good till canceled sell order up to either down to our loss limit, which we typically don't get to, and I'll tell you why we don't get to that in just a minute. But our target where we get out is at 2.88%. So we sold half of our position. We let the rest of our position ride. So in other words, we made, on our practice trade, 1.44%, half of the 2.88% on $100,000. So you could say, oh, well, you made 2.88% on $50,000. Yes, that is the same as making 1.44% on $100,000. So what we're doing is we're selling half of our position, letting the rest of it ride, hoping that something magical happens. Now, it didn't happen here. What happened was it did move up higher, but again, we were letting things ride to potentially 2 times or more. In fact, I let it ride for as high as it will go until things start to turn around. So we didn't set any kind of good till canceled sell order on when to get out. We did pay attention to what our loss that we would take is. So here's what we did. We sold half the position during this week. On that half of a position, we made $1,440 in our practice trade. That was, again, what we would have made on $100,000 at 1.44% or $50,000 at 2.88%. So that was our profit. We let the other half of the trade ride until what happened? The market turned over. And when it hit our entry point, we pulled our trade. We just said, we'll risk it up to the point that we realize this is going down, and either we pull it a little early when we start seeing red candles, or we pull it when we hit our loss limit, which is where we got in. What does that do for you? That makes sure that you don't have a loss. You've, in other words, made 2.88% on half your money, and the rest of it you're willing to let ride until what? You get stopped out if you get to your loss limit, which is what happened. During the week, this red week here, during the week beginning the 21st of February. Short week because there was a holiday. Then what happened? Let me move this along here. Then during that week, of course, since things did go red, we jumped into a down trade on SH, which is the inverse for the S&P 500. That was during the week beginning the 21st of February, and we got in at the lowest, crappiest point, that is price point, on Friday, the Friday of that week, at 398.08. And we rode that down. Now you can see that we again used our average true range off the 2-day chart down here. We used the average true range to set our profit and loss bands. What happened? Well, things went down, and you can see our profit band was hit here on the week beginning the 6th of March. and we hit that profit band at 387.62, and we made the 2.63% on our $50,000, or half that on our $100,000. I hope that's making sense. That would be 1.32%. So we made $1,320. We let the rest of it ride, hoping it would take off. It didn't. Actually, the week beginning, if you look, the week beginning the 20th of March, things turned around. So when they did and we hit our sell point, our stop limit, we would have been taken out of the trade and we're done. So again, no profits rode too far on that one. We did make, 2.63% on half the trade, or 1.32% on the whole trade. Then what did we do next? Well, things turned around. So we jumped in to an up move. What happened there? We jumped in on the week beginning the 20th of March. And again, on Friday, the crappiest time in the afternoon with the highest price. We didn't jump into the lowest part of the day. That was $395.84. We jumped in on Friday afternoon of the week beginning the 20th of March. I guess that would have been the 25th. And our jumping in point was $395.84. We rode that up till actually just the next week and sold half our position. But you might have said, Tom, why wouldn't you have just let it all ride? Because I didn't know it was going to do this. It hadn't done it for the beginning of the year, for a few months. Why in the world would I not do my thing and sell half my position? So I did. And I made 2.7% on this practice trade for half that position, or 1.35%, on the $100,000. So I added another $1,350 to my winnings on my practice trades. But here's the magic. This is what you've been waiting for. This is the key to this method. If it would have moved back down, we would have sold at no loss or minimized it if it really trumped down on us too quick. But again, you can sure set a stop loss order right after you pull out. But again, here's what we did. We left that other half to run, right? And boy, did it run. It has run, and it has run, and it has run, and it has run. And as of this week, I took the lowest that we saw during the week, and I took our jumping in point with that other half of $395.84. What was our return? Our return on this other half was a beautiful 6.32%. I'm sorry. Yes, it was, because the total return, if the whole 100,000 had run, it would have been 12.63%. But since we only got half, it was 6.32%. Again, for a total up to today's date at the lowest point during this week of $6,320, period. Now, you might say, Tom, what's the total on all those? First trade, $1,440. Second trade, $1,320. Third trade, $1,350. Fourth trade, $6,320. And what do we see from that? Well, we see a total that we have done on these trades is $10,430. What is that as far as returns go? The math is real easy. If you have $100,000, basically 10.43% that we have made on our practice trades with no losses using this method that we talk about on the show constantly. Now, this run up here is crazy incredible. Would we expect that any given year? No, we wouldn't. But look at these trades. Just over the course of a few weeks, all of them working. So again, we like this method because it does what? It lets us cut our losses, take a small profit, but not get hit with crazy losses. And then at the same time, when we have the market take off either up or down, we've got an unlimited, not unlimited, but a beautiful up window to maximize profits. This is one of the many things that we teach here, and this is how it works. I would encourage you, practice trade. We're not a stock calling service. We're an education firm. We want you to practice with us and learn how things work, but you learn how things work by doing it. And I encourage you to follow and learn what we do here. God bless my friends. All the best from the whole team at Charting Wealth World Headquarters.